we know that a strong high creates a weak low, and we know that a strong low creates a weak high, right? So that's out the way. So now, we have a strong low. We're going to create that weak high. Push up, push down, inducement. And let's say we short right here. Right? Now understand this. There's a difference between shorting here and longing down here. And that would be pro trend or counter trend. Now, to find out if you are counter trending or pro trending, so let's say if you're in pro trend, you got to know where price is coming from, right? From a higher time frame POI, right? Where is price coming from? Did it break a high? Did it break a higher high? So obviously you're pro trend, you're looking for a new high, meaning that you're going to target the external range liquidity. If you're pro trend, your targets are external range liquidity. Overall, simple as that. If you're counter trending, and by counter trending, I mean you are taking the retracement, because this is the retracement down, right? This is the push down to make it high. If you're trading the retracement, your targets are internal range liquidity, right? There can be multiple lows in here, but the one that we're aiming for is going to be the lowest internal range liquidity. That will be your full target. You're not going to target the POI. You're going to target the last internal range liquidity, right? There is, again, there will be times where it might miss and go simply because, again, human error. You probably didn't see the internal liquidity right, you missed something, etc. So be aware of that. That's why we always pay ourselves, right? If this is a new range from here to here, then we are going to pay ourselves when it takes out this low. Not only that, we are also going to go break even. That's when we go break even. Break even and pay yourself something, right? And that's up to you. It's a personal choice. Just pay yourself something, right? And then hold the rest to the last internal range liquidity target. Then whatever happens from there, don't matter no more because you already break even, you already pay yourself something. Can you take partials here? Yeah. Nothing wrong with taking partials here and here. You can, right? Nothing wrong with that. But we want to maximize this position. And we know that there's a high chance it will take out all internal liquidity first, come into a POI before it takes out external. All right. So if you're trading the retracement, you're targeting internal liquidity. It doesn't matter what range it is, whether it's a 5-minute range, 1-hour range, 4-hour range, whether it's a daily range, whichever range you're in, if you're counter trading the retracement, right? Pro structure here, retracement, you are targeting internal liquidity. If you are pro trend, you're targeting external liquidity. Simple as that, right? Doesn't matter what range it is. That'll be your overall target, right? And partials, pay yourself something at the first break, right, of that low, in this case, break of this range right here, and go break even. If you're looking for confirmation entry, then obviously the same thing. Long right here, pay yourself right here. Pay yourself right here, and then go break even. And that the price do what needs to do to maximize your position. All right. So that's the targets. Simple as that. Don't overcomplicate it. Retracement, counter trend, internal liquidity, pro trend, external liquidity. Right? Can you take partials on pro trend? Yes, you can. You can take partials on the highs along the way. There's nothing wrong with that. You can take partials on the highs along the way. All right, but you know your overall target. Now, let's not forget about the obstacles that I mentioned in the beginning. All right. Obstacles are unmitigated strong highs inside of a range. That's an unmitigated strong high, meaning even though there's an overall target up here, right? Price can give us a reaction. It gives a reaction, right? So again, be aware of that. And yes, you can take a short here, but that'll be counter trend, right? Then wait, what are you going to target? You're going to target the internal range of this newfound range that just formed. Let me just color on this. This newfound range that just formed, right? And then the overall target is still this. Nothing has changed. Okay. Now this is advanced. It's a little bit of advanced structure and stuff like that. That will be covered most likely either in the intermediate or advanced section. Pretty much going to the end of the intermediate course. So yeah, but be aware of obstacles. Okay. Price can give you a reaction from the area. Right? Don't forget the bigger picture. Always keep the bigger picture in mind. Zoom out. Don't forget where you're at, because it's easy to get confused. As you can see, there's so much going on. It's a lot, right? It is a lot. But with time, it'll become simple and you'll be able to understand and build that confidence to be able to execute counter trend moves and pro trend moves. Okay. So now let's go into stop loss placement. We already know the stop loss placement for a direct entry, so we don't gotta talk about that. But if you're looking for a confirmation entry, let's say POI comes in here, liquidity, break structure, right? Inducement, POI right there, and you're looking to go long right here, right? Your stop loss placement, right, can be just below your POI, just below your POI, right? So if you have an order block, let's say you have an order block, you're looking to go long here, your stop loss can go just below that block and you'll be okay, right? But I also have another stop loss placement option, which is what I call a safe stop, a safe stop loss, right? And your safe stop loss will always be below a strong low or a strong high, right? Because the understanding of that, or my understanding of that, is that a strong low and a strong high, or a protected low or protected high is another word, right? Price should not go below it. It should stay protected. So no matter what happens, it shouldn't break above or below a strong high or a strong low, right? Now, eventually we will in the future, but at this moment, for example, here, it shouldn't, right? Lining everything up together, it shouldn't. So if you're not confident on having a 3 pip stop loss, let's say, then put it just below the strong low and you should be fine. Now, I don't use anything less than 2 pips. And I don't recommend anybody using anything less than 2 pips. If you do, that's up to you. But I don't use anything less than 2 pips because it's not worth risking your money and being stopped out by, let's say you got a 1 pip stop loss, then it takes you out. So to put it in perspective, right? If you're risking $1,000, 1K, right, and you get a 1 pip stop loss, and then it takes you out by 1 pip, then it goes, you just lost $1,000. And I think, in my opinion, that's pretty dumb, right? If you're trading real money, this would mess up with your psychology. It will mess up your mindset, to be honest, because $1,000 in a 1 pip sounds crazy, right? So don't use anything less than 2 pips. All right. Now, what's the biggest stop loss? All right. To be honest, I wouldn't go over 10 pips. All right. I don't go over that. I stay between 3 Yeah, between 3 to 10, somewhere between there. I mean, 2 to 10, my fault, 2 to 10. Don't know what I put it, 3. Uh, 2 to 10, that is my stop loss placement between those two. Whether it's a 2, whether it's a 10, or in the middle, all right? Not 3, I don't know why I put it there, I forgot. But yeah, between 2 or 10, okay? So if this down here is a 6 pip stop loss, that's completely fine. It's okay, all right? Don't let the people on Instagram or YouTube or, posting their entry with 2 pip or 1 pip, that's them. Let them be, right? You're here to make your money. You're here to be right, and you're here to understand your system, your strategy, and be consistent. Okay. No one cares about your stop loss. No one cares about how much R you make. No one cares about the money you make. And if you do care about that, then you're in the wrong industry, right? Because at the end of the day, it's for you to make your money and live your life and do what you want to do, right? But anyways, this is not psychology, of course, right? However, anywhere from 2 to 10 is your stop loss placement. Safe stop loss will always be below strong low or above a strong high, right? And then the original stop loss placement would be just below or above a POI. Simple as that. All right. So we just covered partials, we covered TPs, and we covered stop loss placement. Okay. So it's as simple as that, guys. Right? Don't overcomplicate it. That's how we target. That's how we take partials. That's how we, par stop loss. Pretty straightforward. All right. Any questions? Let me know. But that is it for this. See you on the next one.